In this video, we'll go over what exactly high-yield savings accounts are, how these accounts work, the pros and cons of having one, and how to pick which high-yield account's best for you. Feel free to pause the video to read the disclaimer or find the full disclaimer in the video description below. A high-yield savings account is a type of savings account that earns a high annual percentage yield, or APY, on the money you keep in your account. The APY includes the interest rate you're earning on the account, as well as compound interest you earn, which is basically earning interest on interest. These accounts offer significantly higher interest rates than traditional bank accounts. Right now, many banks with high-yield savings accounts are offering over 4% APY, compared to many traditional banks that have savings accounts with rates as low as 0.01% APY, like with Chase and Bank of America. In addition to the high APY, high-yield savings accounts also normally have no monthly maintenance fees, which makes them way more flexible than many traditional bank accounts that do have monthly maintenance fees. The reason these banks can offer high interest rates with no monthly fees for their high-yield savings accounts is that the banks generally have much lower costs. Banks that offer high-yield accounts are typically online banks, not brick-and-mortar banks like Chase and Bank of America. Since these online banks don't have the kind of overhead costs that traditional banks with physical bank branches have, like paying rent for the branch and hiring bank tellers, they're basically passing a lot of the savings onto their customers in the form of a high APY, with no monthly fees. Some popular banks that offer great high-yield savings accounts include Discover, Amex, Capital One, Ally Bank, and SoFi. Now let's go over the main pros and cons of having a high-yield savings account. Bear in mind, not all high-yield accounts are the same. These are just the common features many high-yield savings accounts share. One of the biggest benefits of a high-yield savings account is, of course, the high APY you can earn. It's the best place to put all your excess money that would otherwise be sitting in your traditional checking or savings account for your short-term financial goals. This can be things like your emergency fund, a fund for a large expense like a car, a down payment on a house, a college fund for your kids, or a vacation. Many high-yield accounts also compound daily rather than monthly. The interest rate you earn will vary depending on the federal funds rate, which is set by the Federal Reserve. When the Federal Reserve raises interest rates, banks will usually follow suit shortly after. And when the Federal Reserve lowers rates, banks will do the same as well. So the APY on your high-yield account will fluctuate over the course of the year depending on the market. Right now, most popular high-yield savings accounts are offering APYs from the lower end of 4% to 5% or so. Let's say you have $10,000 saved up as your emergency fund. If you keep it in your regular Chase or BOA checking or savings account over the course of a year, you'll be earning a maximum of 0.01% APY on it depending on the account. So that'd come out to about $1 in interest over the course of the year. If you instead keep it in a high-yield savings account that averages out to 4% APY over the course of a year, you'd instead earn a little over $400. That's free money from just letting your money sit in the account, with the ability to move it at any time if you do need to dip into your savings. Most high-yield savings accounts are also FDIC insured, just like any traditional bank account. So your money is just as safe with these accounts at online banks as it is with a bank account at brick-and-mortar banks like Chase and BOA. With FDIC insurance, the money you keep in your bank account is protected by the federal government if the bank your account is with fails. FDIC insurance usually covers $250,000 per depositor, per insured bank, per account ownership category, so you don't have to worry about the safety of your money up to that amount. You can also spread your money out across more than one high-yield account as well, which you may want to consider, especially if you want to keep more than that amount in the bank. Opening these accounts is also quick and easy. It usually takes 10 to 15 minutes tops. To open an account, you can just visit the bank's website or app and start your application online. Or you can often call their customer service line if you prefer to apply over the phone. Another huge benefit of high-yield accounts is that they're typically very flexible. As we mentioned earlier, they usually don't have any monthly maintenance fees like traditional banks do, which can often range from $5 to $12. With brick-and-mortar banks, you'll often only be able to waive the monthly maintenance fee if you meet certain criteria, like maintaining a certain minimum balance in your account at the beginning of each day, which for most banks is usually at least a few $100s. With a high-yield savings account, though, you normally don't have a minimum balance requirement, so you don't have to worry about fees for dipping below a certain threshold. Of course, you'll want to still keep at least a few dollars in the account at all times to make sure the account stays open. Most high-yield accounts also have no minimum opening deposit requirements, or very low requirements, so you can often fund them with just a few dollars when you're starting out. In addition, with a high-yield account, your money isn't being tied up in the account for a period of time, like with some other accounts, like a certificate of deposit or CD. With CDs, you'll get higher APYs, but at the expense of having to keep your money there for a set amount of time, which is usually at least a year. So with a high-yield savings account, you have easy access to your money in case you need to use some of it for an unexpected expense. And again, since there usually isn't a minimum balance required for high-yield accounts, you can often allow your balance to dip down to as low as just a few dollars if you do need to use most of your savings. Just be aware of any monthly limits for the number of transfers or withdrawals you can make out of your account, if your high-yield account has any. Some high-yield accounts will also offer you a sign-up bonus if you open a new account and complete qualifying activities. To earn a bonus, you often need to deposit a certain amount of money in the account within a set period of time, or you need to set up and receive a certain dollar amount of direct deposits within a certain time period. Instead of a bonus of a set dollar amount, some accounts may instead offer a bonus percent on top of your regular APY for the account for a certain period of time. Always search online before applying for an account to see if the account does have some kind of sign-up offer available. Even if an account doesn't have a sign-up offer, usually the high APY for the account is more than enough reason to open the account regardless. Now, there are a few cons that many high-yield savings accounts have. The banks that offer high-yield accounts are usually online banks that don't have physical bank branches, so you'll need to be comfortable doing your banking online, including for adding money to and withdrawing money from your account, and you'll need to rely on contacting their customer service team by phone or through their site if you need help with your account. With many high-yield savings accounts, you also usually can't deposit or withdraw cash using an ATM either, as most accounts don't give you an actual ATM or debit card, so you'll often need to do all your transactions online through transferring your money into or out of your high-yield account. If you do want to withdraw or deposit cash, you'll normally need to do so through an ATM or branch of your regular bank, like Chase or BOA. To transfer funds, you can transfer money online from your regular bank account to your high-yield account to add money to it, or transfer money from your high-yield account to your regular bank account to withdraw money. There are exceptions, like SoFi for example, which does give you a debit card for your account and allows you to deposit cash at certain ATMs and withdraw cash at certain retail locations. Another slight con is that there are other types of accounts that can offer higher rates than high-yield savings accounts, like with CD accounts for example. For instance, Discover's CD account is offering a 4.7% APY for a 12-month term. Of course, your money's locked in with a CD account, and there's normally a high minimum opening deposit as well. For Discover's CD account, for example, the minimum opening deposit is $2,500. As we mentioned earlier, the APY for your high-yield account is variable, as it'll usually fluctuate along with the rate set by the Federal Reserve. So if the account has a 4.3% APY when you open the account, for example, that APY could increase or decrease at any time. Generally speaking, the APY will increase or decrease a bit a few times a year. It can also take a few days for the money you transfer out of your high-yield savings account to hit your external bank account. If you're transferring money out of your high-yield account, it's best to initiate the transfer well before you'll need to use it. Usually a week before you need it is a good rule of thumb. Some high-yield accounts also have transfer limits, while others don't, so that's also something to keep in mind. For example, Discover's high-yield account has a limit of 6 transfers or withdrawals out of your high-yield account per calendar month, while the Amex high-yield account doesn't have any limits. With the nature of high-yield accounts, that's usually not that big of a deal though, since the account's really made for growing your savings over time with a high APY, rather than taking money out frequently for your everyday expenses. It's also good to keep in mind that you'll need to pay taxes on the interest you earn from your high-yield account. Normally, we don't need to worry about this with our traditional bank accounts, since they usually earn very little interest every year. You'll get a 1099 INT form in the mail if you earn at least $10 in interest over the course of the year. So it's a good practice to put some of that money aside for taxes, or at least keep that in mind so you're prepared come tax season. Even though you're paying taxes on the interest you've earned, high-yield accounts are still worth it. You're just paying taxes on extra money that you're earning passively by just keeping your money in a certain type of bank account. At the end of the day, it's still free money. There are a lot of great high-yield savings accounts on the market, with popular banks like American Express, Discover, Capital One, SoFi, and Ally Bank to name a few. To determine what account will be the best fit for you, you'll want to take a look at your financial and work situation, primarily whether you can set up direct deposit or not, and whether you have at least a few $1,000s already saved up. With some banks, you can get a really high APY if you have a few $1,000s saved up that you can transfer to your high-yield account, like with CIT Bank, or if you're able to set up direct deposit with your paycheck or benefits, like with SoFi. Right now, most of these less flexible accounts with higher rates are offering APYs in the range of the mid-4s to the low 5s. For a slightly lower APY, but still pretty high, there are a lot of flexible high-yield accounts with well-known banks, like Discover and Amex for example. For reference, most of these accounts are offering an APY in the low to mid-4s at the moment. If you're not sure where to start, the more flexible accounts like the Amex and Discover high-yield savings accounts are great options to consider as a beginner, since there are no monthly fees and no minimum balance or direct deposit requirements in order to get their high APY. If you want to learn more about these accounts, you can check out our video on them after this video. Before you start your application for a high-yield account though, be sure to check if there's a sign-up bonus available for it. Banks will usually advertise the sign-up bonus on their main website, but sometimes they don't. I like to double-check by Googling the name of the high-yield account and then adding the word bonus to see if there's a bonus there that's not advertised, or a higher bonus available there. For example, Discover is currently offering a bonus that's not advertised on their main site. You may also get a targeted bonus in an email from the bank if you already have a relationship with them through a credit card or another bank account with them. Let me know in the comments, do you have a high-yield savings account or are you thinking of getting one? If so, which high-yield account? If you found this video helpful, you may be interested in this video next, where we give a full review of the Discover and American Express high-yield savings accounts. You can also check out this video with some easy bank bonuses for checking accounts with direct deposit. If you enjoyed this video, it'd be a huge help if you could click like and subscribe if you haven't already. It really helps our videos reach more people to help them save money, and it's totally free. If you want to be notified when we post new videos, don't forget to click the notification bell as well. Thanks for watching and see you next time.